Welcome, dear traders. You're watching a recap of the Asian session. Wall Street halted its decline yesterday, which fostered a slight rise in Asian stocks in the morning. All stock indexes notched modest gains. The US dollar, on the contrary, remained at the same levels after a drastic rise last week. As a result, its rivals had a chance to recover. Sentiment also improved slightly. The majority of investors priced in further aggressive rate hikes. Asian stock markets grew on Tuesday following a rebound on Wall Street. Traders continue to assess the prospects of economic growth, inflation, and monetary policy. They also analyzed a batch of economic reports from the Asia-Pacific region. Japan and Australia unveiled strong retail sales data. In Hong Kong, Chief Executive John Lee announced that the city would end its mask mandate on Wednesday, March 1. Stocks in Australia, Japan, Hong Kong and mainland China rose immediately following his speech. The only bearish factor is mounting tensions between the United States and China. They boost uncertainty in the region. Traders also keep an eye on the Fed's comments. The regulator may hike the key rate by 50 basis points at the March meeting. The likelihood of such a scenario is now estimated at 24%. However, some speculators are still betting on a 25 basis point increase. Despite the hawkish rhetoric, investors still hope that the Fed could take a pause in the tightening cycle. Today, U.S. macro stats are in the limelight. These reports may significantly impact the sentiment and even trigger reversal. U.S. consumer confidence data will be published later today. The indicator is expected to grow to 108.50 in February from the January level of 107.10. The US dollar climbed slightly ahead of the release of crucial economic reports. It dipped from a 7-week high of 105 points. Nevertheless, it ends February on a positive note. Overall, it gained about 3%, thus it was able to halt its losing streak and won back some of its losses. Its correction on Monday will hardly change the situation. Traders are revising their strategies, taking into account fresh economic reports. Besides, the economic calendar will be quite eventful in the coming days. Many investors are confident now that the Fed will remain committed to monetary tightening in the long term. It's bullish for the US dollar. Demand remains buoyant, although it will be extremely hard for the greenback to rise higher in the coming weeks. It may regain momentum amid strong economic reports and the new hawkish comments from Fed policymakers. After breakout about 105, the US dollar may retest the early high of 105.60. One of the main reasons for the retreat was a steeper than expected decline in durable goods orders. This report somewhat weakened expectations of a further aggressive tightening. Japan revealed its industrial production and retail sales reports today. Retail sales rose more than expected in January, while a contraction in industrial production exceeded the forecasts. However, such macro stats are of a little concern to traders as they do not affect the dollar-yen pair. Its trajectory slightly changed in the Asian trade. The divergence in the monetary policy of the Fed and the Bank of Japan remains the main driver for the pair. It will continue to whine on the pair in the near future, which is rather unfavorable for the yen. The new Bank of Japan governor has already given many speeches. However, he didn't say anything new, and he probably won't do that. He stressed that a shift to a tougher stance may occur only in the event of a significant increase in inflation. Given that this scenario looks extremely unlikely, the dovish stance will hardly be revised in the near future. The yuan faced a strong pressure yesterday, rising above 136. In the Asian session, the pair mainly consolidated near the Monday highs. A further weakness of the yuan is likely to remain intact in the near term. It may soon touch the first bullish target level of 137.70. After that, it could test 140, given the Bank of Japan's commitment to a dovish stance. However, the upward cycle of the US dollar is coming to an end. If so, the pair may drop below 134. However, such drastic changes will hardly take place soon. The resistance level is located at 137.90. The strong support level is seen at 135. The economic calendar now for New Zealand did not include any important reports today. Australia published retail sales data, and the indicator turned out to be positive. According to preliminary estimates, retail sales in January surged by 1.9% on a monthly basis, exceeding the forecast reading of 1.5%. It also rose after the downwardly revised figure of 4% last month. Two Reserve Bank of Australia board members will leave their posts later this year. The market reaction was positive. New people are associated with the changes, and the question is how they could affect monetary policy, so investors are sure to closely follow this event. The Australian dollar stopped falling yesterday, but it looked more like a respite. In the Asian session, it declined again. The AUD-USD pair may return to 0.6600. After that, it could drift to 0.6680 and even lower in the short term. Despite the weak downward momentum, there is a risk of a further drop to 0.6775. Only after that, a rebound may take place. Given its oversold status, any decline in the coming days will hardly push the pair below the support level of 0.6680. A breakout of a 0.6785 will indicate a steady recovery of the AUD-USD pair. The NZD-USD pair continues to move within the downward channel. Technical indicators signal a short-term bearish trend. The Kiwi is extremely vulnerable to the US dollar movements because of the empty economic calendar. The pair may test the resistance level of 0.6215 today. Shortly after, it could slide below 0.5945. The bearish scenario for the NZD-USD pair will be cancelled in the event of a strong price increase and a breakout of a 0.6335. In this case, the pair may rise to 0.6545. And that's all for now. Don't miss our next video review. Please leave your comment down below, and see you soon.